Welcome to the Safe Harbor Election for Small Taxpayers mini lesson. I'm excited to present this content to you today, and let's get started with the lesson. This tax election is really provided to small taxpayers as defined by the IRS. We're going to talk about that to allow small businesses, small taxpayers the ability to deduct immediately repairs and maintenance items that typically would be capitalized. So we're going to talk about when the election could be made per IRS regulation section 1.263, what unadjusted basis of your property is. It's a tax concept they're going to chat through. We also have our activity investment matrix, our AIM matrix. That's a TTF proprietary system and category that we created. Well, we're going to look at your AIM matrix and figure out who could most benefit from this tax election. Then we're going to take a look at our calls to action. Now, the Safe Harbor election for small taxpayers, the slide you're looking at right now, there is a lot of information on there. It's very wordy. This is coming right from the IRS website. But what I want to focus on is who qualifies as a small taxpayer. So the IRS is telling us, we always talk about that taxing agencies are your involuntary business partner. So what does IRS consider a small taxpayer? You're going to have to meet all of the categories, all the bullet points there. But the first one is your average gross receipts have to be at $10 million or less. That obviously makes almost all small businesses eligible for this tax election. Excuse me. Your unadjusted basis of your building or leased property has to be under $1 million. We're going to talk about that. The total amount you paid for repairs, maintenance, improvements, and other activities doesn't exceed the lesser of two numbers. So the lesser of 2% of your building's adjusted basis or $10,000. So if your building's unadjusted basis is $600,000, 600,000 times 2% is 12,000. That means that it would be the lesser of the 10,000 or 12,000. So the total amount paid for repairs, maintenance, upkeep of that building has to be below the lesser of one of those two numbers. If you qualify for this election, many elections and many things you have to do with the tax, and in our other content we cover it, we file a Form 3115. You do not have to file that form to make the Safe Harbor election for small taxpayers. You simply attach this election to your annual tax return for each year you qualify and would like to make that tax election. Let's talk about unadjusted basis. Unadjusted basis is typically the building's original cost, but that not including the land. So let's say there were some whatever the acquisition cost of the building minus the land is typically your unadjusted basis, and you also add to that your capitalized expenses. So you could see here on the text, you don't subtract amounts you deducted for depreciation. That would be adjusted basis. Unadjusted is the capitalized cost of the building minus the land. Now, if you own more than one rental unit, the $1 million limit is applied to each unit separately. That's very important when we're talking about the Safe Harbor election for small taxpayers. I know the unadjusted basis concept is confusing, but just think through that it's the cost of the building plus capitalized expenses minus land, and you don't deduct depreciation. And the IRS looks at this on a building-by-building basis, okay? So, for example, a landlord with any rental buildings with an adjusted basis of less than $1 million could use the election on each of them. So it's not an aggregated $1 million of basis. Let's take a look at our AIM chart. We're looking right now at this highlighted area, the Safe Harbor for small taxpayers. We already talked about how it helps you get an immediate deduction in those limitations, but who could it really help out? Well, as you know in the AIM chart, a PI is a passive investor. So a passive investor with a long-term rental that has other passive income or has other not rental income that's going to be taxable in some way, shape, or form could benefit from it. For a material participant, possibly the same thing. For someone with rep status, which is part of our other content, with a long-term rental property, definitely could benefit from this election. And then same with the passive investor with a short-term rental, but a material participant and a rep status person with a short-term rental is a heck yes, can benefit from this election. Remember, there are special rules for short-term rentals with material participation that we cover in our other content. So figure out where you're at on that same chart, and that ties right in with our calls to action. First, review your tax return to determine if you're even eligible for the small safe harbor for small taxpayers election. And then take a look at your AIM profile. If you're eligible for it, that's great. Step 2, hey, I looked at my tax return, I'm eligible for it. And then if eligible, make that tax election as an annual election on your tax return. You don't have to file that 3115, which is step number 4 from our calls to action. All right, thanks for watching and have a great day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.